everyone. Our today's topic is income from other sources and subject is taxation 2. First, we will discuss the theory of this chapter. Here, all the taxable incomes under the head of income from other sources are given. First, interest on any security. Any security means interest received from commercial securities or interest received from government securities. So, it is taxable under the head of income from other sources. Next, income from horse race, lottery, puzzles, card games, etc. Third, gift received other than relatives. If a gift received from relatives, then it is not taxable under this head. It is exempted. But if gift received other than relatives, then it is taxable. Next, ground rent. Next, agricultural income outside of India. If there is given agricultural income of India, then it is not taxable, it is exempted. But agricultural income given outside of India, then it is taxable. Next, income from letting vacant plot or subletting house. Next, royalty. Next, copyright. Next, unexplained assets. Next, director fees. Next, examination fees received as an examiner. Next, interest on advance tax. Next, allowances received by parliament member. Next, rent of mines. And last, family pension received of a decreased employee. These all are tax-free securities, means exempted securities. First, interest on gold deposit bond. Next, tax-free bond of HUDCO, means HUDCO. Next, tax-free bond of RECL. Next, tax-free bond of NHPCL. Next, treasury saving certi. Next, post office cash certi. Next, 7% capital investment bonds. Next, relief bonds. Next, debentures of public sector company. And last, income from UTI, means Unit Trust of India. Note, interest on this all above securities is fully tax free, means fully exempted. Next, dividend and agricultural income received in India is fully exempted, means there is no tax. Next, brokerage is not deductible. Next, family pension less from total income. Deduct 33 into 1/3 percentage or 15,000, whichever is less. Next, if there are given any expenses related to taxable income, then it will be deducted as a specific deduction. Next, grossing up. First, tax-free government securities. If there are given tax-free government securities, then you must have to calculate grossing up on these tax-free government securities. Next, tax-free commercial securities. If there are given tax-free commercial security, then you must have to calculate grossing up on this commercial securities and less tax commercial securities. If there is net interest or amount is given, then must calculate grossing up. But if there are given interest rate only, then no need to calculate grossing up on these securities. And formula of grossing up interest is interest into 100 upon 100 minus TDS rate. So we'll start sum number 1. Mr. Popatbhai held the following securities and shares on 31st March 2019. First, 15% debentures of X Limited, amount is 2 lakh. Second, 12% tax-free debentures listed of a company. TDS means tax deducted at source at the rate 10%. Amount is 1,50,000. Next, 14% preference shares of X Company Limited. rupees 1 lakh. Next, 10% tax-free government securities, amount is 30,000. And 7% municipal debentures, amount is rupees 1 lakh. Rupees 150 were paid to the bank as a commission for collecting the interest. It is expenses, so we have to deduct at last in specific deduction. And rupees 50 for preference shares dividend. Dividend is exempted, so it will be not deduct. And rupees 13,500 as interest on loan taken to purchase 15% debentures. It is also like an expenses, so it will be deducted from all these incomes taxable. So we have to calculate Popat Bhai's taxable income under the head income from other sources for assessment year 2019-20. This is the answer. First, 15% debentures of X Company Limited, amount is rupees 2 lakh and rate is 15%. So 2 lakh into 15% is equal to 30,000. Next, 12% tax for debentures listed of a company. Amount is rupees 1,50,000 and 12% is rate of interest. So net amount of interest is 18,000 and there are given TDS at the rate 10%. So 18,000 into 100 upon 100 minus TDS rate means 100 minus 10. So 18,000 into 100 upon 100 minus 10 is equal to 90. So net amount is 20,000. Third, 10% tax-free government securities. Amount is 30,000 and rate of interest is 10%. There is not given TDS, so only interest is taxable. Rupees 3 lakh rupees 3,000 amount. 4. 7% municipal debentures, amount is 1 lakh and percentage is 7. So 1 lakh into 7% is equal to 7,000. So first make the total of this all incomes 30,000 plus 20,000 plus 3,000 plus 7,000 is equal to total incomes 60,000 less deduction. So there are given deduction rupees 150 were paid to the bank as a commission. So commission is our expenses and rupees 50 for preference share dividend. Share dividend is not expenses, so it is not taxable under this head. And 13,500 is also expenses. So here we have deduct two entries. First, bank commission rupees 150 and second, interest on loan 13,500. So 60,000 minus 150 minus 13,500 is equal to 46,350. This is our net answer. Taxable income from other sources. Next, sum number 2. From the following information, calculate the income from other sources of Shri X for the year ended on 31st March 2019. The following were the investment on 1st April 2018. First, 8% municipal corporation bonds of rupees 10,000. Second, 10% tax-free debentures of rupees 27,000 and TDS rate is 10%. Next, 6% tax-free government securities of rupees 10,000. Fourth, 12% preference shares of rupees 80,000. Preference shares is exempted. Next, 10% tax-free unlisted debentures of rupees 27,000 and TDS rate is 10%. Additional informations. Interest on the above was always paid on 31st December each year. Means 31st December is interest calculation date. On 31st 8 2018, he sold rupees 10,000 6% tax free government securities for rupees 7,500. So he had sold at number 3 6% tax free government securities of rupees 10,000, sold at 7,500, and on the same day purchased at rupees 10,000 8% municipal corporation bonds for rupees 9,500. The required balance of amount for such purchase was borrowed rupees at 15% interest per annum. He has paid rupees 60 for brokerage on the purchase. Brokerage is exempted, not taxable, and sale of securities, and rupees 50 for collection of interest. Collection of interest is taxable, so it will be deducted from all incomes taxable. Dividend on preference shares was declared in March 2018. This is the answer. Number 1, 8% municipal corporation bonds. See, 8% municipal corporation bonds of rupees 10,000. So 10,000 into 8% is equal to 800. And add new purchase the 8% municipal corporation bonds. See second line. On the same day, purchased rupees 10,000 8% municipal corporation bonds for rupees 9,500. So we have to add this new 8% municipal corporation bonds in old corporation bonds. That is 10,000 into 8% is equal to 800. So 800 plus 800 is equal to 1600 net amount of 8% municipal corporation bonds. Next, 10% tax-free listed debentures. 10% tax-free debentures. The amount is 27,000 and rate is 10%. TDS is also 10%. So 27,000 into 10% is equal to 2,700 into 100 upon 100 minus TDS means 100 minus 10. So 2,700 into 100 upon 90. So amount is 3,000. And third, 10% tax-free unlisted debentures. Entry number 5, 10% tax-free unlisted debentures of rupees 27,000. So per interest percentage is 10, amount is 27,000 and TDS rate is 10%. So 10% tax-free unlisted debenture 27,000 into 10% is equal to 2,700 into 100 upon 100 minus 10. 10 means TDS. So 2,700 into 100 upon 90. Amount is 3,000. And 1,600 plus 3,000 plus 3,000. So total of all incomes is rupees 7,600 less deductions. There are given deductions. See, the required balance of amount for such purchase means borrowing amount is 9,500, purchase amount and selling amount 7,500. So 9,500 minus 7,500 is equal to 2,000. Borrowing is equal to 9,500 minus 7,500 is equal to 2,000 into rate 15% and into 7 upon 12. Date for calculation is also given 31st 8 2018. So there is 7 months of interest is deducted. September, October, November, December, January, February and March, 7 months. So 7 upon 12, 9,500 minus 7,500 is equal to 2,000 into rate of interest 15% into 7 months upon total months 12 is equal to total deduction 175, and second collection of interest is also deduction. So minus 50, 7,600 minus deduction 175 and deduction 50 of collection of interest. So net amount is 7375, that is 7,375 our taxable income of income from other sources. Thank you.